Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack with Invesco. We're going to take a look at weekly Nasdaq 100 performance, as well as what sectors are participating. And Ryan, your last chart, I'm really excited about as we take a 5-year look at some of the top stocks within the index. Let's go to your first chart and just take a quick peek at how it performed over the past week.
Yeah, I mean, I think given everything that happened over the week, it's sort of a dull performance story, right? With QQQ trading lower by 0.25%. Versus the S&P 500, which was lower by 0.58%, and value, which was down over 0.6%. Year to date, QQQ is picking up kind of where it left off. Outperformance against the S&P 500 up 4.42%. Versus the S&P 500's gain of 1.97 and S&P 500 values gain of 0.67%. But I think as you look back over the past week, investors had to sort of grapple with a bunch of different things happening in the market. You had mixed economic data where Q4 GDP came in a little softer than expected, showing a 4% annualized growth versus expectations for 4.2%. And that's down off of the historic expansion that we saw in Q3 of 33.4%. Within that same report, you saw personal consumption at 2.5%, a little lighter than estimates at 3.1%. The employment picture is still kind of back and forth in terms of improvement versus deterioration. ISM manufacturing showing good demand, but you have people going back and forth on additional stimulus or resources as it relates to COVID-19, and throw on top of this all the speculation that we saw in some of these stocks and earnings reports, and it just made for a pretty choppy week of trading.
And we drill it down further into the sectors. Where are you seeing that performance come from?
Yeah, I think when you're looking at the performance, within QQQ, for the vast majority of sectors, we outperform the counterparts in the S&P 500. For instance, something like consumer discretionary up 0.7% versus the S&P, where it showed negative performance. Tech, another marginal outperformer, up 5 basis points on the week versus down 15 basis points in the S&P 500. So you can kind of see just the securities within the underlying sectors showing that outperformance within QQQ.
And Ryan, to wrap up here, this last chart really is quite impressive when we take a look at the earnings performance of Apple, of Amazon, Facebook, Alphabet, and of course, Microsoft. And, you can certainly see where the juice is in the index.
Yeah, and that was sort of the impetus as to why we chose this chart, right? So this is showing 5 years earnings per quarter for those heavyweights: Apple, Amazon, Alphabet, Facebook, and Microsoft, even though we touched on Microsoft last week. I think we could talk all afternoon about each individual earnings report, but instead let's just look at it on the whole. Each one of these 5 companies set record for quarterly earnings and quarterly sales over the course of this past calendar quarter. We saw EPS growth from a year-over-year basis, so essentially looking at the same time frame 1 year ago, all greater than 28%. They range from 29% growth all the way up to 118% growth, which was Amazon. Revenue growth, all 5 experienced year-over-year revenue growth, again, looking at the same period in 1 year earlier, of over 16%. That ranged from 17% growth all the way up to 44% growth, which again was Amazon. As you start looking through some of the earnings transcripts and the press releases, you'll see the kind of nods to things like R&D, mentions of innovation, and intertwined within there are comments around a number of these disruptive themes that, Jill, you and I have talked about for a number of months.
One of my favorite charts.
Yeah, right. 5G, cloud computing, electric vehicles, e-commerce, and the list goes on and on. But I think that consistent commitment to R&D and largely innovation has been the hallmark of these stocks, and is really the driver of this incredible earnings and revenue performance that they continue to deliver. Going forward, I think guidance is a little bit clouded just because some are not issuing. But again, as we've spoken about, a lot of these companies have the history of under promising and over delivering. And just a few examples here: Apple and Microsoft have shown quarterly EPS beats for the last 19 consecutive quarters. Apple has beaten the average analyst revenue estimates for 15 consecutive quarters, while Amazon and Facebook have beaten that metric in 9 consecutive quarters. So, going forward, I think it's pretty clear that these stocks do have a pretty considerable amount of earnings momentum, and you can cite strength across a number of these businesses. But their commitment to R&D, their commitment to innovating, we think will serve them very well going forward.
All right, Ryan, appreciate all the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.